It's about that time of day again. My name is Joseph. It's Monday evening, September 25th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro tonight. Crude is bullish, but we're trading at the daily highs, so I'm waiting for a deep two-legged pullback down to the battle zone for more reliable buying opportunities tomorrow. The S&P is bullish as well, trying to complete a pendulum swing target tomorrow, but a short-term trading range combined with a new bull channel are both telling us to wait for more reliable buying opportunities after a deep pullback on Tuesday. Speaking of Tuesday, Nasdaq is bearish, but a short-term bull channel is telling me to stay patient, looking for selling opportunities after the bulls finish their move higher. And of course, the gold is bullish, but a trading range and a major resistance level tells me to look for buying opportunities after we see the two-try roll to the downside tomorrow. And of course, speaking of tomorrow, the euro is bearish and trying to reach a key target for the sellers. But a rising support trend line is telling us to wait for a two-legged correction to sell back down tomorrow. Now we're watching and trading the last week of the month this week, the last few drops of the month of September, which means we're expecting to see an increase in volatility, and we're watching those prior month levels and looking forward to some great big trading opportunities in Tuesday's session. Before we jump in though and put the plan together for tomorrow's session, don't forget the only place to watch the full-length version of this video newsletter is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link on YouTube. Join me here on the blog at Sideways Markets and watch the full-length version of this video newsletter. Don't forget, while you're here, join the mailing list. I'll shoot you an email every evening when that newsletter goes live. Lower left-hand corner, follow me on social, StockTwits, Twitter, Facebook, LinkedIn, whatever your flavor of choice. I'm always posting important charts, links, and updates throughout the week. And speaking of charts, make sure you grab those charts ahead of tomorrow's session. All the charts from tonight's video are available for download right below that video. Follow that link on the blog at Sideways Markets. And don't forget, what are you waiting for? If you're not a member here at School of Trade, grab the free pass. Come out and join me in the trade room this week as a guest. You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And don't forget, if you have any questions, I'm always here standing by to answer your questions 24/7. Use that live support tool on the right-hand side of our website. Hope you guys had a great weekend. We're back at it again here this week. As we talked about earlier, we're digging into the last few drops of the month of September. So this week, we got our eyes on the prize here, last full week of the month of September. Of course, we're running into the end of the month, and anytime we talk about the end of the month, we always talk about two things. One, an increase of volatility. Reason why is because traders tend to take bigger risks at the end of the day, at the end of the week, end of the month, which means we're going to be seeing an end of the month, end of the week session on Friday, right? So that's probably going to be about as bad as it's going to get this week, or maybe as good as it's going to get, depending on whether your glass is half full or glass is half empty. But we're definitely expecting to see some volatility get bigger and bigger and bigger, increased volatility as the week goes on, so look for that later on this week. And we also want to talk about the fact that we're watching those prior month levels, right? So at the end of the month, we start watching the last month's levels, the month open, high, low, and close from the previous month. Those become price magnets. So we're watching for an increase of volatility here this week, which should get more and more as we go, or get closer to the end of the month, that is. And speaking of the end of the month, we're watching those prior month open, high, low, close levels because they'll act as price magnets. Now, I'm going to sound like a broken record this week, right? We'll talk more about that as we go. As far as tomorrow's session goes, tomorrow, Tuesday, September the 26th, all we really have tomorrow on the calendar is that new home sales number at 10 a.m. Eastern time. Now, I got to be honest with you, in our trade room, I don't need there to be news at 10 a.m. I'm always expecting to see some volatility at 10 a.m. Eastern time. We call it the 10 o'clock shock in our trade room. So, of course, if you're with us tomorrow, we open up our trade room at 8 o'clock Eastern time. We'll be watching for that 10 o'clock shock. And with those new home sales number at 10 o'clock Eastern time tomorrow, that will likely be the big market moving event for tomorrow morning. So no major news in the overnight session, no major news tomorrow in London. All we have tomorrow is that 10 o'clock top of the hour. Speaking of tomorrow, let's jump right in. We got a good plan of attack here for tomorrow. Tomorrow, of course, is a Tuesday Monday session. Got a lot of great volatility on the charts here setting up for tomorrow, which always tells me, right, we're going to be looking for some great opportunities as well. We'll start tonight with crude oil. We'll go crude oil, S&P, Nasdaq, gold, and euro. So don't forget to watch all the way to the very end, right? Because some of our best moves happen on gold and euro. Starting off tonight here on crude oil. Crude oil is bullish with a strong spike higher today, which tells me to watch for a channel, a wedge, a range, or a possible flag pattern developing into the overnight session. Depending on the price action we get overnight, the plan is to focus on buying low, right? Very strong move higher here. You'll notice we're above the prior month high, wink, wink, right? We're watching that prior month high at 51.06. But again, depending on what the price action does here overnight, our plan is to focus on buying low, preferably down in that battle zone, using the 2-try rule to catch the sellers on the wrong side of the market. Now, if price continues to push higher, the plan remains the same. Look for it, right? Look for one of those 4 scenarios, right? Channels, wedges, ranges, or flag patterns, and that will tell us exactly where to trade. Now, we can see by looking at the chart here right now, again, mentioned earlier, right? That prior month high is here at 51.06, right? So that will, towards the end of the week, that will likely start becoming a bit more of a price magnet. Right now, I'm not going to worry too much about it right now. My big concern right now is how do we get involved with this run of a market? Strong move up into a spike and channel. I had it marked up today as a spike and triangle, and we spent the morning in our trade room buying the dip, right, of that spike and triangle. And of course, then you'll notice price breaks up, runs through it with what I would call a spike, right, that never pulls back to the moving average, right? That's my definition of a spike. So we don't see this very often, right? Spike into spike, but hey, here we are. We have a strong spike higher. Anytime I see a strong move higher that doesn't pull back to the moving average, the first thing I think is wow, there's probably a lot of people out there that haven't been given a chance to get long, right? There are probably a lot of traders out there that are still sitting patiently on the sidelines, and they'll look to get involved once they get what? Probably a deep 2-legged pullback. So that's what I'm looking for tomorrow. Looking for a nice 2-legged pullback. In all reality, I'd like to see these bears try once, bears try twice, and then wait for that second attempt for those bears to reverse the trend. Once they try twice, then I can start looking for those buying opportunities, right, going back up to retest the high. Remember, whenever we see a real strong move in one direction, we know the odds are very good that we're going to see a 2-legged pullback and a retest of the high. So I'm going to be looking for buying opportunities down in these battle zones tomorrow. Hopefully, it won't take too much patience, but I'm prepared to wait patiently to get a nice risk-reward ratio. Small amount of risk, big amount of reward, right? If I buy right now, my reward is very small compared to my risk, right? If I wait patiently for a deeper pullback, then I can get into a position where my risk is a lot smaller than my reward. Once I get into that situation where I can risk, say, 10 to 15 ticks, right, to make, say, 30 to 45 ticks, now we're in a spot where I can really start getting excited. So that's going to be the plan. That's the overall plan here for tomorrow, right? Now, whenever I see a real strong move that spikes up like this, I'm watching really for one of 4 scenarios. I'm watching for a spike in channel, I'm watching for a spike and wedge. Not as common, right? Spike and wedge. I'm watching for a spike and range, which definitely might happen here in the overnight session, so watch out for a range. Or, right, don't forget, possible spike and flag pattern. We're going to see one of those coming up, right, on the euro in just a few moments, so make sure you stick around on that. Either way, right, I'm looking for that nice deep pullback, right, to buy, going back up to retest the high. So what would that look like? Well, hopefully we can use this developing lower as a trend line here. Use that trend line up, 1, 2, right, and then back up we go. That would be an easy way to be a buyer here for tomorrow. Or, maybe we get a little more interesting here. Maybe we see a deep pullback, right? Deep pullback, failure, you'll notice I'm keeping on that bull spike and channel, right? That bull spike and channel hopefully will act as support for us tomorrow. We'll know more once we get there. Bears try to sell below the moving average. They fail. That's your first buying opportunity. That then usually leads to strength going higher, and then we can buy the pullback back to that moving average. So buyers will be looking for those bears to fail. Again, one try, two try, like I mentioned earlier, right? Bears fail, buyers then take it back higher, and again, we can look for that failure and then buy that pullback again. So really some great opportunities as long as we get a relatively deep pullback. Don't forget, if we do see price go higher here without pulling back, for example, maybe we see a spike in channel here. If we do see the price continue here to go higher, the plan stays the same. Now what I'll look for is I'll look left, find those swings, and same thing, one try, two try, back up to retest the high. Maybe we see a flag pattern start developing here overnight, right? Flags are a little bit more difficult. In that situation, you want to see it overshoot that low. That's the key to a good flag pattern, overshooting the low of that flag. Or maybe we see a trading range, right? Jump up. Maybe we don't see a deep pullback, but we don't see price go higher either. End up seeing a trading range. Once I see those double tops and double bottoms, then I know we have a range-bound market. And whenever a range-bound market, I'm looking for a one try, two try, failure, back up, or a successful breakout, or what I call a fake out breakout pullback, which is a breakout pullback that involves two legs down, right, for that little trap low there. So as you can see here, lots of different ways we can buy. All of them really require us to get nice and low. So even if price keeps going higher tomorrow, we're still in the same boat. We still want to wait patiently, right, for at least that two-legged correction. Now, we could reverse tomorrow. I don't want to say we can't. I never say the word can't, right? I always say, I'm kidding with you. But, you really want to be open-minded. You don't want to think in terms of this can't happen tomorrow. So we do want to be prepared for it, at least mentally and technically here for tomorrow. What would it take for this bull market to reverse? Strength, pullback, strength. This is obviously not drawn to scale, but if we can get one leg lower, hold the pullback to the moving average, and then see a second leg lower. Once we see that second leg go lower, now we know the bears have taken control, and if that's the case, right, we'll grab our own bear channel. We'll use that channel rotation, measured moves on the way down, and I would imagine, again, we have that prior month high. That'll be kind of an end of the month thing. It'll quickly get sucked back down to that prior month high, but the real big objective for tomorrow would back down to retest that low at 50.39. So definitely looking forward to a nice deep pullback here off the high. If it keeps pushing higher here, the plan stays the same. And again, as much as I don't expect to see a full reversal tomorrow, it is definitely possible. Anything is possible, right? This is the crude oil market we're talking about, so anything, right, can definitely go tomorrow. And we'll see what we get in the overnight session, right? I think in the next few hours, we'll be able to know more about what type of structure we're going to be seeing for tomorrow. Now, speaking of structure, here's a great chart. Boy, how many different learning and earning opportunities did we find today on the S&P? One of our favorite markets in our trade room is the Emini S&P. The S&P is clearly bullish, entering back in the original range that started today's session. Along with, we're now at the high of this new bull channel. The session started with a strong spike in range going lower, right? We blasted lower, started going sideways into a spike in range, right? That's where that range comes from. So it's no surprise to see prices back inside the original range, especially after the bears tried twice to retest the lows, right? You can notice that one try, first and second tries are marked up on the chart. At this point, our best option is to ride this momentum back to retest today's high. But I don't want to buy into this resistance, so I'm looking for buying opportunities back at channel lows and down in that battle zone here for tomorrow. Boy, let's see if I can cover as much as possible here right now. First of all, day starts off, strong move down into double tops and double bottoms. That's a spike in range. What do we always look for when it comes to a range like that? Traps and failures going back down in, right? So the sellers got a chance to sell high, and they took full advantage of it running it lower. Now, at that point in the morning, right, we're running into that prior month high. We're expecting the sellers after such a strong move down. Remember, anytime we see a strong move in one direction, we're always expecting to see what? Two legs, one, two, and then a retest of that low. Well, look what happened, right? They couldn't retest the low. So what are the bears going to do? Side. Shall we do it again tomorrow? Absolutely. Got a big Tuesday session right around the corner. We're trying to squeeze out the last few drops of this month of September. We're expecting some big volatile sessions the rest of the week. We're watching those prior month levels, and we're going to do this together tomorrow in our trade room at 8 o'clock Eastern time. Want to learn more? I hope you do. Don't forget, you get a great free trial here on the homepage of the website. I'm a little bit biased, obviously, but I think we have one of the best free trials in the business. I put my heart and soul into that free trial for you guys, so hope you guys enjoy it. If you're on the YouTube channel right now, don't forget, there's a link in that YouTube channel description, and that'll take you over to our blog, right, for our full-length newsletter, and also over to our website here at schooloftrade.com, where you can learn more about our free trial. While you're here, don't forget, I'm always here to answer your questions about our beginner, intermediate, and advanced membership. And don't forget, we always have great flexible payment terms, right, for our advanced membership package. What are you waiting for? Come out and join the free trial. Join me tomorrow in the trade room as a guest, right, as part of our free pass. And I'll see you guys alongside all of our advanced members tomorrow morning at 8 o'clock Eastern time. If not, we'll do it again, same time, same place, before 8 p.m. Eastern time, Monday through Thursday. My name is Joseph. Thanks so much for being here once again. Don't forget to keep the great feedback coming. You can always email me directly. That is jj@schooloftrade.com. And don't forget, we'll be here same time, same place tonight, tomorrow night, to do it all over again. Be well out there, be nice to each other, and be here tomorrow. Adios, amigos.